It's been a busy couple of weeks, and it's surprising because it's in the middle of summer. But I hope that you guys are kind of taking advantage of this time to get everything in order, to market, to talk to the people that you've been putting off because you were too busy. But that's kind of what we use this time for, is to revamp, to make sure that we're preparing for the next wave, the next hit. And that's what I kind of see happening. Dad, what would you say? Sometimes it's predictable, which makes it unpredictable when it doesn't happen, right? The market,
It's never predictable. I've never had it
we think it's
entirely
predictable. Maybe that's what it is.
It hasn't been predictable since I started. I mean, honestly, you want to be prepared for everything that can conceivably happen. And I guess we go on the Ian basis at this point. We want to be ready for something that's worst case analysis,
Yeah.
and then
Yeah,
be grateful when it doesn't happen.
Yeah, and so what we're seeing, I have a lot of clients that are not terribly busy right now, and I have a lot of clients that are, they find that they're surprised how busy they are, and you just have to be preparing for it. So from our perspective, what we're doing right now is we're just trying to make sure that we have the right marketing in place, that we have the right staffing, the right systems and software. And this is when we take the opportunity to talk to people, to reach out. So if that's something that you guys want to do with us, if you want to schedule something where we can go over, contracts, or you want to go over some questions you've had, or meet with clients of yours that are maybe on the fence about buying or selling, this is the time to ask, because we have a little bit more time than normal right now. And Dad, you and I do this a lot. We love to have not confrontations, consultations with realtors, clients, lenders, and we actually really look forward to it.
Yeah, I mean, there's a lot of strategy if you're a seller from another state, a seller from another country, and likewise, if you're a buyer from some other state or country. So, and you have a reluctant seller. So we often meet with people and how to structure the deal and make it look attractive, how to protect people.
Yeah, absolutely. And then, so that's a good transition actually, because I wanted to make sure that that we were talking about some things that other people in other country or other parts of the country don't really have to deal with very often. And that would be insurance related stuff, storms, hurricanes, how we prepare for that, what parts of the contracts we need to know about, because we're starting to see this, this anxiety pump up right now. We certainly had our fair share of storm related damage last year, and hopefully we'll miss that this year. But I want to prepare all of you and prepare ourselves for the possibility. And the big reason I wanted to talk about it was insurance. I will tell you, I've never seen so many insurance related issues than what we're seeing right now. And it really starts from the fact that if the property had a prior insurance claim, it's costing the new buyer real money. And it's not just the single family homes. This is also impacting the condos. So as we've talked about before, condominiums have a master policy that covers the building and the structure. And then each homeowner will have an HO6 policy, or like an individual, it's like a condo policy. Well, those HO6 policies, they're pretty straightforward, but the master policies are subject to these issues of insurance as well. If you had claims last year, getting the reinsurance for this year, doing the premiums doubling, tripling, or potentially not even being available. And we're seeing this as a real issue. In fact, we have a buyer brochure on our website, and I have them in the office as well. And I had to move up the insurance related point to the top. Because traditionally that's something you wait till the end, maybe 2 weeks before closing, you call a couple insurance brokers, you get the best price you can. But now I'm wanting my clients to do that during inspection period. I want to make sure that, if there is an issue on insurance, that you're looking at it before you have non-refundable money. That makes sense, Dad?
It does, and it ties in with your preference for the as-is contracts. That and applying for approval with the association are two things that people typically put off to the very end.
Yeah. Well, let me share my screen really quick. See if I can do this correctly. All right. So first, is the obvious. Seemingly every year that we have a big storm, NABOR has come out with these disclosures, and I still think they're incredibly relevant. I'd still want my sellers to use this as part of the contract, and I want the buyer's agents to use it as well, because I think it still applies. So September 2022, Hurricane Ian made landfall, and this property or a lot of properties in Southwest Florida may have been affected. Prior to entering into a sales contract, seller and buyer each advised to consult with their respective legal advisors, lenders, and insurance companies concerning the following. And I'll let you read that. If you don't have access to this form, feel free to reach out to me. But I love this because if you have a buyer that, the day of closing, oh my gosh, insurance is so much higher than I expected. If you had disclosed this, even as if you were their agent, making sure that you disclose this to the buyer up front, hey, look, I warned you that insurance has been difficult. We have it in writing. We talked about it. Hopefully this will subside. We can get better rates over time, but this, you were disclosed this. I think it's pretty powerful this here. So repair or restoration of property damage, pending or potential Ian specific insurance claims, levied and or potential special assessments, all these things are very relevant, but that number 2 there, pending or potential Ian specific insurance claims. Now, the reason why I wanted to talk about this is I have seen it impact several closings just in the last 2 weeks. And it varies what happens, but what I worry about, the thing that bothers me is that the buyer all of a sudden realizes the cost is going to be a lot higher than they expected because of a prior insurance claim. So let's say the seller had, pool cage damage or roof damage, if not last year, maybe the year before, whatever it may have been. And that insurance claim is out there. And because of the insurance claim, the buyer's new insurance policy is going to be really expensive. Instead of it being $5,000, which is a lot, 5,000 is a lot, it might be 10 or 15,000. And that is very real. And what it does, and what I've noticed, is the buyers get really upset, really round up. They think someone took advantage of them. They bought the wrong property. They weren't told about this. They start pointing fingers. And it's sad because it makes an otherwise very smooth, straightforward closing into very contentious, where the buyer's costs are going through the roof. It's kind of like if there was a special assessment and no one told them about it. That's how they feel. It kind of works the same way because it's hitting them in the wallet the same way. And it's not just this one year, but potentially future years as well. Not fun. Now, the other scenario that I saw, one that really bothered me, was an open insurance claim. So the seller had an open insurance claim and still won't close it because there was some circumstances. They wanted to make sure they were getting the best deal possible from their insurance company. They weren't just going to accept the first offer. And in the meantime, they list the property for sale, they accept an offer, and that insurance claim is still out there. And the contracts kind of treat this differently, but it's a problem because now the buyer potentially can't even bind insurance. Now, at some point, we'll have an insurance broker get on here with us and kind of give us the nuts and bolts of it. But for this discussion, I'll just say it made the buyer get, it led them to the point where they were denied by 4 or 5 different insurance brokers. Nope, sorry, can't do anything. No, none of my brokers, none of my underwriters will cover you. So they're going down the line, they're getting denied. And everyone's saying, well, what about Citizens, which is the Florida-run insurance company? Yeah, and Citizens was probably available or will be available to that. But in the meantime, this buyer is starting to get really nervous. They start to get anxious, start getting upset, especially when they realize now they're at Citizens instead of that $5,000 policy, it's $15,000. And, it's not that the buyer can't afford it. It's that they feel like they were misled, they were mistreated. And it's just a really hard current to combat. And so let's look at the contract. First thing I wanted to point out is our standard NABOR contract. So this is residential improved property sales contract. This would be the standard one. This language is also in the as-is contract for NABOR. But if we look at line 180, This part's really important. Past insurance claims. Seller is unaware of any past insurance claims on the property, which would increase the cost or restrict the availability of insurance coverage for the property. That's one of the seller disclosures. So if you know you had an open insurance claim, or if you had one in the last 3 months, this could cause your seller some liability. Have you ever come across this one, Dad? Is this, I mean, we
Well,
see it all the time, but
we had this in one of our prior articles where it was 2 years before. And it affected, there was a question of fact on whether or not it would affect the fair market value of the property and would be considered a latent material defect. So I would say even 2 years before. I mean, in the hypothetical I use, if you have two condominium units side by side and one was flooded and the other was not, would that affect how much you would offer for the flooded unit versus the non-flooded unit? And
Yeah.
I know I'd offer less.
Yeah, so this, in that article you wrote, Dad, that the scary thing, the thing that's a bit of a roller coaster is you have this, non-disclosure or failure to disclose, or even like an improper disclosure. And now buyer and seller, not only now that buyer's anxiety and the cost and the fear is turning into anger, and it turns really quickly. And you get a demand letter and potentially even get sued, and they throw fraud. They throw intentionally misled to, our detriment, all these different torts that are available. You get the book gets thrown at you, right, Dad? That was the case we looked at
That was the case we looked at, and it's not, in that case, ironically, it was almost better not to disclose at all because it was 3 counts. You can argue whether or not it's material or not, but you don't have to argue anything.
Yeah.
They don't just hit you for failure to disclose. They hit you for negligent disclosure or fraudulent, fraud and inducement. So they always throw those two in there.
Well, and so the seller, they could combat it. They could say, well, it's a past insurance claim, but I had no idea. I was completely unaware that it would increase the cost of insurance or restrict the availability of it. But by then the damage is already done. So I think the key for everybody is to realize that this language is in these contracts, these sales contracts, saying the seller's giving this disclosure. Don't worry. And in the very least, an open insurance claim, I think, is a huge problem because it makes it really hard to get coverage. In fact, I even had a client who had an open insurance claim. She's a buyer. She had an open insurance claim in Tennessee, and that open insurance claim on a separate property was prohibiting her from being able to bind insurance down here in Naples. I don't know the circumstances of that. There might have been some extenuating circumstances, but still a problem. Open insurance claim, I don't like it. So if I'm a listing agent, I don't want to hear any of that. I want to make sure that that's not happening.
And again, with this clause, Christian, they want to know about past claims, even if they're closed.
Even if they're closed, anything that would restrict the availability of insurance or increase the cost. So we had a deal just this past week that there was an insurance claim, the washing machine flooded, and they fixed it. It was like $12,000 in damage. They fixed it, and then when the buyer went to go get insurance a couple of months later, there were 2 insurance claims in the last 8 months. One was for the storm, and that was like a pool cage, and one was this washing machine. And those 2, I think they like tripled the buyer's cost on insurance. And the buyer's just like, what else didn't you tell me? Why, what, and it was like, look, we didn't do it intentionally, but it's still a problem. It still caused a lot of discomfort. It made the closing, really nasty for a minute there. Buyer asked for additional walkthroughs. They just didn't trust the seller anymore. Even if they had no reason not to trust him. I think the seller was above board. It caused a lot of friction. The other thing that you would point out in these contracts, and this is where having a loan actually would help a buyer. But if you were to have a financing contingency and insurance is a problem, if you can't get insurance, or if it's so expensive that you would get denied for the loan because of debt to income ratio or whatever it may be, buyer could terminate under their financing contingency because of the unavailability of insurance. So I think the problem I've seen, not, in addition to the fact that like I don't like seeing this, is it just kind of, it makes an easy deal really hard because you're dealing with it after the fact. If we can instead say, look, let's just wait until that insurance claim is resolved, then we'll put it on the market. Or if we're going to put it on the market, we have to disclose it on the seller disclosure. And let me show you where you do that. So this is the NABOR seller's disclosure, section 12, insurance. Any insurance claims made on the property? Yes, no, or I don't know. If yes, what was it for? Explain any insurance claims shown above. D, if any insurance claim was made for sinkhole damage, that's different. We don't see a whole lot of that in Southwest Florida regarding sinkholes. But if you had disclosed this on the NABOR seller disclosure and did it in advance, it's not a defect. It overrides the language that's otherwise in the sales contract. Would you agree with that,
the difficult thing here, Chris, I totally agree, is that when the buyer applies for insurance, they're going to find out anyways.
You're going to find out anyways.
You're going to look like you're deceptive. So why not be ahead of the issue?
Be ahead of the issue. And from a buyer's perspective, there are things you can do to prevent the last minute hiccup. I think like what I did with my buyer brochure, we put insurance at the top of the list. It's like, put in your deposit, call an insurance agent, and then do your inspection, right? I kind of want those all up front because if you wait to the end, it might be too late. And then now you're just arguing verbally and you kind of getting angry. But if you haven't put the deposit down yet, or if you're still within your as-is due diligence, then it can really clean things up. Would you say, Dad, that is it possible that an open insurance claim could be considered a defect? I don't think they reference that.
It's not a defect, but indirectly, if the buyer doesn't qualify for their mortgage for conditions relating to the property, this is under NABOR.
Yeah, under the financing
contingency. They could get turned down for their loan and get out of the deal. Yeah, I just feel strongly where the buyer's insurance agent is going to know about it. The seller has an opportunity to present it in the proper light. This was the claim. Here's the repairs that we had done. Here are the repair invoices where we paid so-and-so to do whatever it was, so that the buyer doesn't have this surge of anxiety over, oh my God, what was this?
Right, exactly. Yeah, that makes sense. Now, this part here, insurance availability and cost, this is always already in here, or in here as well. Forever. Prior to signing this contract, buyers advised to consult with insurance professionals to ascertain the availability and cost of casualty, wind, and or flood insurance. And further, that insurance may be required if buyers financing the purchase. So there are these disclosures where you can easily see the seller has a little bit of liability if they don't clean this up before closing and if they don't disclose it. And the buyer also has some liability for doing their own due diligence. This is kind of like buyer only has themselves to blame if they didn't get a survey. Buyer only has themselves to blame if they didn't do a title search or things like that. Not only, but they share in the responsibility. Typically, when we see litigation, Dad, they'll determine, all right, what are the damages, and then who's at fault. Who caused it. The causation is really powerful, and so they'll say, all right, there's $1 million in damage, but buyer and seller share fault equally. So seller, you're responsible for 500,000. Buyer, you're responsible for 500,000. So that's a lot of times how we like to look at this is, we want everybody looking. We want everybody paying attention to this.
And I wouldn't just rely on this. I'd put it in the seller's disclosure. I'd have additional, like I said, the invoices on what invoices you received and paid for. So it's clear that it's not just boilerplate.
Right, exactly. So someone asked in the questions, does FARBAR have something similar to this? Not really. Not really. And that's what I wanted to go over. It's not listed, at least the last time I looked at it, it's not listed in the FARBAR standard sales contract or the as-is as one of the disclosures. And also, FAR doesn't have a seller's disclosure. You have to kind of rely on the FAR.
The FAR one. And the FAR
So,
one goes over past and present. Have you ever had a leak leak in the roof?
right. And
Ever?
I was talking with an agent this morning who was bewildered. He's been a client of ours for a long time. He was bewildered over and over and over again as to why some people don't recommend doing seller disclosures. And we've talked about that topic over and over again, but to him, he sees a couple of agents in the market that they're adamant we don't want our sellers doing seller disclosures. And Dad, you and I don't agree with that generally. There might be some strategy under very unique situations, but we want sellers doing disclosures, and the disclosures talk about insurance.
And I think it builds trust. I mean, every time I've seen it pop up, it just creates this trusting environment between the seller and the buyer, and it helps the deal go so much smoother.
Yeah.
We had one recently. It was a $5 million sale, and the buyer, we were representing the buyer, and the buyer called at one point and said, "Stop all work on the file. I just found out the seller had the home tented for termites." It was tented, it was repaired, but he didn't trust the seller at that point.
Right. And that's where, like, if it lands on our desk, because there's been this failure of communication, we're playing behind the eight ball. We're really struggling to kind of regain people's trust. It's a lot harder job at that point if you're trying to get, the teeth come out. The teeth come out,
Yes.
and this is us on the little lifeboat. And this is Jaws coming to eat us. My son drew that. He's always reminding me that there are sharks in the water.
Sharks, yeah.
Yeah. So I think it's a really powerful thing. Now there are other topics. So this is a really good example as to why contracts are hard to decipher. It's not that the language is impossible to understand. I mean, you saw it. It's basically one sentence, a simple disclosure that seller's not aware of these things. But how it impacts other parts of the contract is where it gets really complex. And that's where, Dad, you and I are pretty efficient with our contracts. And I think that's the value add. It's like, okay, this is here, but there are also these 5 other things. And in insurance, a lot of people will point out, all right, well, there's the force majeure language in the FAR contract, or the casualty language in NABOR. And I try to make that distinction and tell them that language only applies if there was a casualty event or a force majeure event during the contract period. It really wouldn't, and we'd have to look at it again, but it really wouldn't affect something that happened in the past, and then you went under contract and you're still having trouble with insurance. Yeah. So it's complex, and I just wanted to make sure that you guys were thinking of it correctly. Personally and morally, I want a seller to be aware and caring enough that the buyer is struggling to get insurance. We can always go back to the contract. We can always say, hey, look, we tried everything we could. We're so sorry about the problem you're having. We tried to clean this up. We tried to do this. But at the end of the day, I need you to close, and I'm 100% correct under the contract that I don't have any other obligation. But I think what I'm finding a lot, and Dad, you've probably seen this forever, is that the initial response from a seller or a listing agent is, well, I don't care, right?
I don't care. Painful. I don't want to do it. And what they don't seem to realize is this actually protects them. And especially with values being the way they are right now, you're dealing with wealthy people with independent means. They can afford to hire lawyers, and many buyers just feel they do not like to be taken advantage of. They don't like being deceived. And if the seller does a very thorough disclosure, not only are you presenting it in your light, in your terms, and this is what we did to rectify it and all that stuff, something the buyer is going to find out about anyways, but you're insulating the seller from suits for failure to disclose, which you theoretically have under Johnson v. Davis. You have it under the contract with all that extra language in there, and depending upon whether you use a FAR or seller disclosure, you got to disclose everything in the past. So it protects the seller and it avoids that situation where the buyer wants to get out for some other reason. And they go
Yeah.
looking at the contract to see if there's something that the seller failed to do, which
Yeah.
we see a lot. They could have had a bad day in the stock market and they
Yeah.
want out. What can we look for that the seller didn't do correctly?
Yeah. And we talk about a lot, when I try to make the distinctions, because I used to practice in Atlanta where 99% of my clients they owned one house, they lived month to month. And this, they put all their life savings into this house. Now in South Florida, we have the privilege of working with clients that may own multiple homes. The cost of insurance, even if it's affordable to the buyer, even if they can write the check and be done with it, it upsets them, really upsets them. And it's not because they can't afford it, it's because they think they're getting taken advantage of. And that's almost worse than the person that can't afford it. If you can't afford it, there's not much arguing that a seller can do about it. It's like, oh gosh, yeah, you're right. You can't afford it. You're dead in the water. That deal doesn't happen. But if you have a buyer that can't afford it and you force them to do it anyways, good luck. It's like my grandfather, Dad, he always used to say, you can ask me anything, just don't tell me what to do.
Well, you met the guy, huh?
I met the guy and I believe him, right? He's the most generous man in the world.
He'll give you
But if
anything.
you told
But
him what to do, now he thinks he's getting taken advantage of. And so
no,
I'm
it's a
seeing it too much. I'm seeing that way
Yeah.
too much. It really worries me. And you touched on it a little bit, Dad. You have very wealthy buyers. So this is an additional kind of like factor to this. A lot of what I'm seeing, the sellers aren't as wealthy as the buyers. So let's take the typical example. You have $1 million condo selling in Naples somewhere. Well, the seller didn't pay $1 million. They paid 350 10 years ago. And now it's $1 million. And so these two parties, the buyer and seller, they're different kinds of people. You have a seller that paid 350 for, their condo that they use a couple months a year, and they don't, they're living month to month. Like my neighbor, Dad, our neighbor, they were retired police officers, right? They were on a pension. They weren't super wealthy, but the people that own the house now, this is their second or third home. They rent it out. They paid cash for it. It's just a different kind of buyer. And so the buyer's thinking, this is a requirement. I need this. I'm paying top dollar. And the seller's thinking, wow, you're wasting your money. You're overspending. You're doing, it's a tough.
They'll fight over the craziest things because they can afford to. They're used to being treated a certain way. They're used to running their own company. They're used to having all the data. And I don't care if it's just a garbage disposal. They don't want to feel like you got cute with them.
Yeah. So let's talk, the last part on this is just kind of like hurricane prep stuff, things that you and I see every year when this time of year comes by, and just kind of some typical housekeeping tips. Number one is, and I want to talk about, is insurance. Make sure your seller maintains insurance as long as they own the property. This is a trick, and not everyone does it, but I love this trick. I don't try to cancel my insurance until the day after closing. A lot of sellers, they plan, all right, I'm going to call insurance the week before closing. I'm going to tell them that we're closing on Friday, and I'm going to tell them to cancel it for Friday. So what I do instead is I tell them, just wait till Monday, call them at your leisure. We'll make sure that the closing on Friday actually happened. And then when you call the next week, you tell them, hey, we closed last week. Here's the settlement statement. Here's where you can mail the check. And they backdate it. They go back to the closing date, and they'll actually give you the money back for as long as you owned, for whenever you didn't own the property. You'll get your premium back. So that's a little trick. So I think it protects sellers where there's a delay in the closing, where there might be a storm or a power outage or whatever. So don't cancel insurance until after closing.
Yeah, you got to wait at least until the money's cleared in your account. At least.
Exactly. At least. I think that makes sense. Now, the other tip is how we handle walkthroughs and things like that. So let's say we're under contract and there's a storm that comes through. It may not even have to be a big storm. And now you're trying to coordinate, final walkthroughs, closing. You expect to close on Wednesday. The storm just happened. And so that you technically have a casualty event. You have this storm that, or this force majeure that potentially impacted insurance availability, closing agent, if our office is closed for a couple of days, if the power is out, the water isn't running, something like that, the buyer can extend. We can extend, I think it's 30 days, before there are any real consequences to that. But just keep in mind, you've got that extension, but then when you do finally close, the buyer might be a little more anxious, and then we just had the storm. I want to get in there. I want to get my inspector back in there. You always felt strongly about having an inspector at the walkthrough.
Well, I mean, because the inspector is the perfect witness in a lawsuit. He's not buying the property. He's not selling the property. He's licensed to do this. He viewed the property, took pictures, put together a nice inspection booklet at the very beginning, and to have him for $275, which I believe is what House Masters charges, to do the walkthrough on this multi-million-dollar deal is a no-brainer.
Yeah, well, and they have perspective. They did the original inspection, so they have some notes that they can compare it against. They live locally, so they know a little bit more about what to expect. It's cheap insurance. It's what we love to see. I had a buyer this past week, and I told him about cheap insurance, a couple of different tips. And in her situation, I suggested she get the mover to come the day before. Cheap insurance, do it the day before, so you're not kind of cram everything the morning of. She's like, I don't want to spend the money. I get it. I get it. I wouldn't want to spend the money either, but the cost, if this goes wrong, is extreme. And so if you're willing to pay out of pocket for the extreme, then yeah, forego the insurance, you're fine. Well, unfortunately, in that scenario, bitter in the butt, but it's both in the butt, because her closing didn't happen quick enough for her to get out and to get paid. And she spent the weekend paying for hotels and all this stuff that she wasn't planning on. And she was really upset. She, this is outrageous and I have to pay this and that. And luckily, and I felt good that I had done it, but I felt bad that she wasn't able to take my advice. And I said, this is what we talked about. This was worst case scenario. I didn't expect it to happen, but I tried to plan for it.
It cost her thousands, if I recall.
It was about $3,000 for a weekend and it would have been $400 for the night. To move the day before would have been $400, and it was tough because we were fighting these assumptions. Oh, it'll be easy. It'll be this, and Dad, you and I have seen it enough. Nothing goes to plan. If it has a chance of going wrong, it probably will.
No, I mean, I tell whenever you get to meet the buyer, I said the normal deal is one where something goes wrong. There's always a hiccup. That's why we're here. We deal with the hiccups. We know if it's a serious hiccup or a minor hiccup. If it's a big hiccup, we know how to fix it.
Yeah,
we've dealt with it before.
Yeah, and that's when you tend to see these thoughts that the buyer or seller has had all along. They come into focus. And they'll start saying, well, we overpaid. Well, they didn't pay us for the furniture and we weren't able to, negotiate. And they were so strict about this. And it's like, all that's behind us. We've already negotiated those things. We're just struggling because the worst case scenario happened. And now you're kind of, wanting to point fingers. It's really sad. It's really hard. And the reality from even my perspective is that's when it's like a landmine. It's a field of landmines, because I'm doing it the same way I always do, but because of the worst case scenario, people are looking to us to lay blame. They look to the agent, they look to the lender, the seller, whomever it may be.
I think you touched on what we were talking about earlier. When somebody gets mad over something like this $400 fee, it's not really that. It's something I overpaid for the place, or I was in hand. I didn't know the insurance was.
I wanted to close in August, and they made me close in July. It's like all these feelings bubble up, and all of a sudden they don't trust you.
I know when I get one of these questions, whatever it is, I always ask the agent, "What's the real reason? Why are they really upset? Because it can't be this, because this is small."
Yeah,
and
exactly.
There's usually something else.
Exactly. So. Couple of quick tips for you. Hopefully you can take advantage of some of them that you didn't know in advance. The only other one I can think of off the top of my head is if you bind insurance. Let's say you're 10 days before closing and you've already done your insurance, you've got your quote. If you pay for it and bind it for the closing date, if you do it 10 days earlier, that storm that's coming doesn't affect your availability of insurance. So if you're a buyer and you want to guarantee that you can get insurance and that you're covered, I would have the buyer bind the insurance as soon as possible during this storm season. So bind early. You're not paying extra, you're just paying early. And then if a storm comes and other people have a moratorium on insurance, your buyer will be covered. Then you're fine whether you close on time or even if it's delayed a little bit, your buyer will be covered. So we'll say it's cheap insurance because it's actually free. You're just paying the premium in advance as opposed to at closing.
And whatever you do, don't do the inspect the walkthrough for your client if you're a realtor.
Yeah. So, and that's,
Please don't
that's liability.
for us.
If someone were to ask you and I, Dad, if someone asked us to do the walkthrough for them as a convenience, we'd say, yikes. It's not something we're comfortable with.
I've been asked that, and I've told them I'm a good lawyer, but I'm an absolute idiot when it comes to doing walkthroughs. I'm not a builder. I'm not an inspector. That's not what I trained for. You want a specialist.
On that note, Dad, you've self-promoting yourself, as
I'm an idiot.
I love it. We'll leave it on that note. And if anyone needs us, please reach out. Good luck, and we hope to see you soon. Thanks, guys.